How's it going, everyone? It is Andre Williams, and today we're going to be talking about DraftKings. I'm so excited about this. This stock has been on my watch list for quite some time, but I do see a big opportunity here, and it's part of the reasons why I want to share this on the channel. So what is the agenda for today? So we're going to be doing a technical analysis. So we're going to be taking a look at those support areas as well as those resistance areas. And just in case it decides to pull back even further, know where those levels are so you can get even a better opportunity. The next thing that I'm going to be going over is an article that I came across that definitely goes over a lot of the catalysts going for DraftKings and as well supporting my thesis in regards to why I'm definitely bullish on this stock. We're also going to be doing the short interest and as well as the institutional ownership information as well. If you're going to be investing in this company, I feel it is crucial that you're up to date and you know what is going on in regards to what you are holding. And also, I got to put in the disclaimer. I'm not a financial advisor, and this isn't financial advice. Just make sure when you do invest, you're doing it at your own risk. Let's get into those videos, and I'll give you guys my final thoughts afterwards. Now on investorplace.com, and there's an article that came out for DraftKings, which I want to share with you guys so you can see the opportunity that I'm actually seeing as well. So DraftKings looks poised for a rebound. Don't be surprised if DraftKings stock hits $70 soon. The online gaming market has remained at the forefront of the pandemic. With the legalization of online sports betting across different states, DraftKings stock has had a wonderful start to the year. DraftKings hit an all-time high of $74 in March 2021 and has slipped to the current level of $59 over the last few weeks. There's a jump in the total addressable market in the US that has led to an increase in revenue expectations for 2021 with a wider market share. DraftKings stock is a screaming buy on the recent pullback. Over the past week, the stock has moved from $63 to $59, which offers a great buying opportunity. DraftKings stock is ready for a rebound and it could hit a new high in the coming weeks. Let's dig deeper into what's making the stock soar. Huge potential in the New York gaming market. New York approved an online sports betting model backed by Governor Andrew Cuomo. As per the plan, the New York Lottery will issue requests for proposals from 2 mobile betting operators who will then subcontract to 4 sportsbook operators. They hope to launch online sports betting by September this year. There are chances that the state budget may have a provision for mobile betting. This model is set to benefit DraftKings, which will bid for one of the licenses. This move can lead to the generation of revenue and increase in the customer base for the company. It is expected that online wagering will make up about 90% of the betting handle in New York. This industry could soon top billions of dollars and benefit DraftKings. Right moves at the right time. DraftKings is making a well-timed move to enhance customer acquisition. The company entered into a deal with the WWE to be an official gaming partner. Once the regulatory approvals are cleared, DraftKings will receive an exclusive license to media assets and branding for WWE events. Recently, the company announced the acquisition of Blue Ribbon Software, a gamification and global jackpot company. Details about the deal are not disclosed. It is expected that this acquisition will help enhance the customer experience and will integrate their jackpot functionality. The deal will help attract customers and will offer rewards and promotions tailored to the needs of the user. It also entered into a partnership with Digital Gaming Corporation's gaming division this week. As per the deal, the company will introduce a set of online games with DraftKings. It will allow DraftKings players in New Jersey to access diverse and premium online casino content. Additionally, the company acquired Vegas Sports Information Network, a multi-platform broadcast and content company, for an undisclosed amount. The deal is expected to generate huge earnings in the long run. These partnerships will drive growth and revenue for the company in 2021. At the end of March, DraftKings was offering its services in 12 states, but this number will soon expand. At present, about 19 states are considering legislation to allow online sports betting. Connecticut recently cleared the way for online gaming, and DraftKings marked its presence there. The bottom line on DraftKings stock. Out of the 23 analysts on TipRank, 16 have a buy rating and 6 have a hold rating with a single sell rating. They have an average price target of $72.77 or 25% upside on today's price. On Monday, Kathy Wood has upped her stake in DraftKings stock. ARK's next generation internet ETF purchased 30,100 more shares, and the ARK FinTech Innovation ETF purchased 431,000 shares. All in all, DraftKings stock can go higher than 70 in the coming weeks, and it can generate high returns for investors. This recent pullback is a great opportunity to add to the stock to your portfolio. There is nothing for investors to worry about. The company is scheduled to release Q1 results on May 7th, and this could drive the stock upward. If you are looking for a stock with high potential and growth prospects, bet your money on DraftKings. The fun has just begun. So I definitely have the same sentiments when it comes to DraftKings. I love how they're setting themselves up for long-term success, and I just see a lot of growth from here going forward. So we're just going to go over this recent press release that came out on April 15th. I won't read the whole thing, but I'll make sure there's going to be a source in the description in case you'd like to check it out. But here's the deal, that DraftKings was named an official sports betting partner of the National Football League, extends rights as exclusive official daily fantasy partner. So DraftKings and the NFL announced today that DraftKings will become an official sports betting partner of the league and extend its current relationship as the exclusive official daily fantasy partner. The way fans consume sports years from now will look drastically different, and it will be due in part of the forward-thinking collaborations like our expanded relationship with the NFL today as an official sports betting partner and the exclusive daily fantasy sports partner, said Jason Robbins, the CEO and chairman and co-founder of DraftKings. We share the same vision as the NFL on fan engagement and believe this agreement will lead to new innovations that will ultimately enhance both the product on the field and on the screen. As an official sports betting partner of the NFL, DraftKings will have the right to integrate relevant sports betting content directly into NFL media properties, including NFL.com and the NFL app. As part of the agreement, DraftKings will utilize the NFL's official league data feed. DraftKings will also be able to enhance their fan experience with NFL highlights, footage, and next-gen states content. So this is definitely great news, and this is what you want to see from a growth company like DraftKings, because it gives you more confidence as a shareholder knowing that they're putting themselves to work to make sure they're keeping their shareholders happy by doing deals that actually forward the company. I love it. So we're going to be doing a technical analysis for DraftKings, which ended up closing on Friday at $57.98, being up 0.87% on the day. When we take a look at the ranges, it had a low of $57.83 and then also had a high of $59.98. So the first thing that we want to take a look at right now, we have the 1-year chart in front of us, is actually areas of support. So we could definitely see there's some support here right at this $58 level. Even when it does break this level, it does a pretty decent job actually recovering or getting close to it. So that's definitely something to be aware of. If we take a look at the RSI right down here below, it's right around 39. So we know in that 30 area, that is a pretty good value. But here's the next thing. What happens if the stock decides to pull back? What's another area to actually look out for? And if we take a look at what's gone down in the past, especially here on March the 5th, this is kind of where we had the correction. A lot of stocks ended up dipping. We got down to as low as $54.50. So taking that into consideration, that'd be a possible pullback area if it does go there. So I'd want to make sure you guys would be prepared about that and not surprised. Now, if that area ever did end up breaking, then the next level to look out for will definitely be around $52. Will it break below 52? I'm really not seeing that. I'm definitely looking forward to seeing some more moves to the upside. But as you can see from DraftKings overall in general, it does come with a lot of volatilities, but at the same time, it is still on an upward trend, as you can see here. So what I'm looking forward to, I know they have earnings that is actually coming up. I think exactly it's on May the 7th. So if we look at prior history in regards to earnings and what has happened with the stock, I'm expecting a run-up. I want to see DraftKings come back to reclaiming the 200-day and the 100-day and possibly making a move to this particular area of $68 where there will be some sort of resistance, and if it's able to get through this, then we can start challenging those all-time highs. So that's what I'm definitely looking for from DraftKings, and that's part of the reasons why I feel right now it is at a really fair, valuable price. But if it does dip, I'm just letting you guys know there's an opportunity there. Again, this is a long-term play. I'm not looking at this short-term, but for anyone who wants to play earnings and so forth, there's definitely an opportunity here. So we're now on fintel.io, and we're going to be taking a look at the institutional ownership and as well as the short interest for DraftKings. So overall in total in regard to institutional owners, we have 888. I must say that is actually one of the largest numbers I've seen so far, and it definitely shows institutions are showing some bullish behavior on DraftKings. And if we take a look at, hey, Walt Disney actually owns 18.7 million shares of DraftKings. That's actually pretty good to see. And we see that Vanguard actually owns 23 million shares of DraftKings as well. And irrespectively with both of them, Disney owns 4.80%, while Vanguard owns 6%. But if we go down bottom below over here, we also have ownership percentage at around 9.90% from EMA Financial. So that was great to actually see and get a breakdown of how the institutions, especially the ones that have heavy positions. So we know that green rows indicate new positions while red rows indicate closed positions. And just by taking a look at this right away, institutions are definitely bullish on DraftKings. We can scroll back. This is April, and this is leading up to Friday, April the 16th. So even on the 16th alone, we definitely have some movements going on with institutions, and also having one institution opening up a new position. We also have one institution that ended up closing their position on Friday as well, which was a call. So as we scroll down on this page, I just want you guys to take note and see what's going on here. We're still in April here, and look at all of this institutional activity that is going down with DraftKings, especially in the month of April here. And even if we take a look, right, we're going to go now in March. We look at March. Look at this. Institutions looking very, very bullish on DraftKings. This is very, very impressive. You don't really see this as often. As we see here from March to 5th, we started having some closed positions. But compared to what we've been seeing, like, it's very, very impressive in the fact of how many institutions are like, hey, DraftKings is a good bet, and that's why they're parking their money there. And of course, with institutions, they're looking at long-term prospects, and that's part of the reasons why I feel that institutions are investing in DraftKings, because they believe in the company. So if we take a look at the short interest here, the short volume ratio is actually at 23%. So this definitely has some short squeeze potential. We know if it's above 21%, that is fairly significant. Right? So as we scroll down on the page, as far as short shares available, it's around 6.5 million. The short borrow fee rate is around 0.26% as well. And if we look at the previous history, we've even had the opportunity to see that the highest that's been before we saw this 22.73 was here at 22.08 back on April the 6th. So again, staying fairly consistent, being in that 20 range in regards to the short volume ratio. So that's actually something that's good to see, and it's definitely one of the indications that could show some serious price action to the upside. So for my final thoughts on DraftKings, I definitely do believe in the long-term outlook of this stock, and it's part of the reasons why I'm going to be loading the boat on Monday. But of course, as you guys know, I use a dollar cost averaging approach, so I'm just going to be starting my first position. Now, one of the reasons why I'm really motivated to do it is all of the catalysts that it has and the catalysts it's been able to take advantage of. So in regards to legislations, there's going to be more states that are going to want to be on board when it comes to sports betting. It's a way of bringing in extra revenue. So the fact that they're considering it and they're looking at it, the chances of it actually going through is very, very high. Now, we already know that Kathy Woods from ARK Invest, many of you know already, she's definitely heavily invested in DraftKings, and it's one of the things that we need to look at. She knows when it comes to disruptive innovation and technology where those gems are. And the fact that, hey, she's looking at it and she sees it, hey, I'm seeing that too as well, especially when I've been looking at all of the information. We also see, hey, they're getting those deals done. They got a deal done with the WWE, and they also have a deal done with the NFL. These are very noticeable and popular names. So just knowing this is definitely a great way for DraftKings to really capitalize and grow, especially for the long term. So with this particular stock, I am bullish on it. And if you are thinking about it or maybe considering it, then definitely do some more homework and some more due diligence, and I know that you will like what you see. They also have earnings coming up on May the 7th. So I know there's some short-term swing traders that watch this channel. There might be an opportunity to play the earnings run-up. Am I going to be doing it? I am thinking about it. But for the most part, as far as how I feel about DraftKings, I'm going long-term with this one. Hope you guys found this video helpful, and I'll be talking to you guys real soon.